Big news this week with the New York Stock Exchange moving on-chain, developing a platform for 24/7 trading of tokenized stocks and ETFs. The move signals TradFi is further embracing digital assets, moving deeper into the space. What do you think this development means for both markets, and what is the biggest change you expect to see?
So I guess for the TradFi market, this is, of course, a strategic advancement to make the TradFi more digital with the help of blockchain and crypto, also more wide accessibility to the global market in terms of tackling into the Asian market, because one strategic move there is to be 24/7. If you notice, it's not just NYSE which announced this tokenization platform sort of strategy this year, January this year. Actually, NASDAQ also did similar announcement last year, but the goal of NYSE NASDAQ are pretty much similar, that they want to use blockchain technology to make traditional financial world more efficient. So I think great minds think alike. NYSE and NASDAQ also see that trend. And then for the crypto world, I guess this is beneficial for some specific sectors. For example, US compliant stablecoins like USDC, because NYSE explicitly mentioned that it would introduce stablecoin based fund settlement. And then for some trading platforms, like even us, we introduced the concept of UEX, Universal Exchange, in 2025. We're probably the largest UEX platform right now. So I would say this conjecture assumes NYSE's tokenized stock trading platform doesn't really support leverage trading, but we do. So more market demand for leverage, and if NYSE omit the leverage services, I think more risk-seeking users will still place order in some crypto stock trading platforms, including Bitget, Hyperliquid, etc., that offer such features. So definitely beneficial to the crypto industry in general by bringing more liquidity, be more compliant. But I would say these two sectors will benefit the most.
So how do you think developments like this, things like 24/7 trading and tokenized stocks, could reshape investor behavior?
As I mentioned earlier, that Asia can be better covered. Asia never sleeps, and neither should their portfolio. So 24/7 trading hours can attract more Asian Pacific investors. Another trading behavior that would change, in my opinion, would be in terms of the settlement. For example, if you want to sell your US stocks and then buy maybe commodity like gold, which is growing very fast recently, right? So across asset trade like this, you at least need two accounts, maybe 3-4 different transfers and 2 days of waiting. But in tokenization, in the on-chain world, it's just one signature, 10 seconds, it's done. It's not just an upgrade, it's more like a time machine. More activities like this can be settled really fast, and that's the magic, that's the total power of blockchain. Another thing that I'm expecting is more around the compliance about RWS, although it might be more regulator or platform specific in terms of a behavior change. Regulations now is much clearer. It's not just a Wild West. Now it's zoned land with building permits in terms of RWA, real-world assets, as well as crypto, stablecoin Genius Act, Clarity Act, etc. Trading platforms like NYSE and NASDAQ now can embrace the asset tokenization in a more compliant manner.
Now, another big topic this week, all eyes are on Davos, where world leaders and business leaders are gathering for the World Economic Forum's annual meeting. And crypto is certainly a topic of conversation. We heard from President Trump, who actually mentioned digital assets in his speech today, saying he hopes to sign a crypto market structure bill into law soon, stressing geopolitical urgency. What do you think about the fact that crypto is in focus in Davos right now? And how would you rate America's moves as it relates to crypto regulation, especially compared to other regions around the world, places like Hong Kong, the EU, UK, and Singapore, for example?
That has different facets. If we are talking about stablecoin or crypto assets, RWAs today, ETFs, capital inflow into Bitcoin and Ethereum, US definitely has a lot of say. Wall Street is the main pricing power of these different asset classes. In terms of a global geographic tension, I'm not a political expert, but I do think various countries and regions have very different approaches. I, as a crypto industry personnel, I definitely support a very clear regulatory frameworks like what Europe MiCA is offering as well as US is offering. Exchange business wise, US can improve. Right now, they only allow exchanges like Coinbase and Robinhood to do that business. I would love to see more clearer regulatory framework towards other offshore exchanges, global exchanges, etc. But Genius Act, it's quite clear. It's very supportive of the US crypto economy. And that gives the United States an edge in terms of having more scenarios holding US treasuries. As we know, stable coins by Genius Act, they all need to buy T-bills or similar very short-term US assets. And it is increasing the power of US dollar. 99% of the stable coins today are USD pegged. Tether, Circle, and a couple of others are the major market players there. So that definitely helps the US to continue the US dollar power over the world. For Asia, I definitely think China, Hong Kong is a little bit slow in terms of regulation. I've heard and participated in some discussions around globalization of RMB, Hong Kong Stablecoin Act passing, and how that supports crypto world and DeFi world. The progress there is much slower in Asia, but Europe and US have fairly good approaches and progress.